The Rebel Capitalist Show.
Let's go through how people can take more control over their own financial future by owning gold and silver. I think most of my viewers understand my position on gold. I think you got to own it. It's insurance in your portfolio. Whether the price is going up or down, it doesn't really matter. It's still serving its purpose, and that's maintaining your purchasing power over decades, over the long term. But before we started recording, you and I had a quick conversation about silver and maybe the value that you've been talking about in a lot of your videos. And I'm not to talk about the price. So can you go into that a little more in detail?
Absolutely.
Okay.
You know, I wouldn't have known any of this had I not done that, talk to that the head of currency trading at Shearson, quite honestly, because that really set me on a path of studying currencies and looking at repeatable patterns. These are things that happen every single time. Obviously, gold has been money for 5,000–6,000 years because of its full utility, but silver as well. So, but it's for a different function. So I created, which is what we executed ITM. I created a strategy for myself before I even got there in 2002, based upon those repeatable patterns, because I don't know, history repeats itself.
Right.
And what I think everybody needs to do is have a plan where you're looking at what is it that you are trying to accomplish. For me personally, I'm almost 66 coming up, and I have children and I have grandchildren. So I want to make sure that I have income that I cannot outlive, right? Number one, right now, if everything is in the fiat markets, they're telling you, well, at 87, you're out of money. That's based on ideals, but you want income that you cannot outlive. And then because of where we are being led by the nose, it's so important for me personally to make sure that my children and my grandchildren and my great-grandchildren retain choice and retain freedom. So leaving a legacy for me is very, very important. So I created this strategy based on those repeatable patterns, and you look at what you're trying to accomplish, and then you say, okay, so what functions do I need to perform? One of the things that we all need to do is sustain our current standard of living. And that means that when that money is disappearing from your account or the prices are going through the roof, either way, then you want to still be able to go out and buy that box of strawberries or put that tank of gas in your car when the currency is no longer trusted. And that's really where silver comes in.
Right.
And pre-65 is 90% silver. So you've got dimes that are a tenth, roughly. They're not quite 3/4 of an ounce because they're 90%. But just to make it simple for people overall, you know, a dime is roughly a tenth of an ounce. A quarter is roughly a quarter of an ounce. A $50 is roughly a half an ounce. And a silver dollar is roughly an ounce. So you have different sizes because during this period, change becomes irrelevant. Right? What are they going to give you? Look at what happened when they closed the banks in Greece. And if you were lucky enough to have cash so you could buy something with that cash, they couldn't give you any change back. They gave you candy bars. Right? Because they couldn't. Yeah, I'm dead serious. This is not a joke.
I didn't realize that.
They couldn't give you cash back. So, but if you have silver, I typically like the smaller denominations as an overall percentage because it's easier to put two dimes together than to break a quarter in half. But I know a lot of people talk about the silver gold ratio and blah, blah, blah. You know, I did a study on what happens during hyperinflation to that ratio, and you got to have gold because gold is the primary currency metal and it's what they reset the currencies against. But and so it typically through those kinds of transitions, it does outperform in terms of purchasing power better than silver.
Okay.
However, you're not going to take a gold coin to the grocery store because you're not getting any change back. You are much better off taking a silver dime or even a silver bracelet, because gold and silver in any form are monetary at its base. And that's one reason why you see me wear jewelry. Because if you don't think I would take off this ring and use that to barter my children's life or future, this is how a lot of people escaped in Europe during Nazi Germany's reign.
Oh, Asia, you look at history all over the world. It's how people have gotten out of tough situations.
Exactly. And honestly, this is absolutely no different. So I do think that silver is a critical part of your portfolio. And in the strategy that I developed, and I've got all the formulas in there, it's on a spreadsheet. So based upon your personal living standards and what you want to accomplish, like for me, I wanted to make sure that my children would have enough silver as well. So I took into account all of their debts, and you're big into real estate, right? Okay, well, globally on average, I'm going to gold here for a second, but globally on average, 25 ounces of gold or the equivalent would buy an entire city block, buildings and all, during these kinds of transitions. So, you need both. It's not one or the other. It's like, what am I trying to accomplish?
Right.
We talked about passive income. Well, it would take this whole room of silver to buy that commercial building or that Senate house or that mandatory parking lot or something like that can generate income for you. And even mortgages, right? Let's make life easy for a second. And let's say that you had a mortgage balance of $100,000 and that you could buy an ounce of gold for $2,000, right? All right. So right now, if you had 100,000, you had a choice. You could either buy 50 ounces of gold or pay off your mortgage. Well, right now that you still have some purchasing power in those dollars, because you could still buy that gold, right? So what would take 100? Well, maybe all you need is 5 ounces of gold when it goes to its fundamental value, or maybe even a quarter of an ounce, depending on how high that goes, to pay off that mortgage.
Right. Yep.
Right.
Yep.
So you want to make sure, and even with your stock portfolios, let's say you are in a 401k or a 403b or something like that you can't or don't want to take out of the market. Well, a truly diversified portfolio is not fiat stocks, fiat bonds, fiat mutual funds, fiat ETFs. That's all one basket. That's all fiat. You need to have that commodity money over here, so that right now, this is where it is. Overvaluation, undervaluation on the commodity money. That's going to shift. So to protect all of that principal and the purchasing power value of that current principal, you've got to have your gold to do that. So you absolutely need silver for a barterable position, but you also need the gold to protect your wealth and position you to take advantage and, frankly, execute exactly the same strategy the governments and central bankers are, paying off these debts with, in this country, dollars that have no value.
Yeah, or less and less value. Yeah. What we need, Lynette, is you and I need to start a fund where we buy cash flowing real estate, but we have all our renters pay us in gold and silver coins and take out 30-year fixed rate debt to do it. So we're getting paid gold to short the dollar through a hard asset that's built with commodities. You can't get any better than that.
I would love that. I am always happy to get paid in gold and silver. Always.